Greetings and thank you for joining us at FutureMoneyTrends.com. I am here with trader Mike Swanson of WallStreetWindow.com. Mike, thanks for joining us again.
Oh, it's great to talk with you.
Mike, I want to start off with the dollar. It's definitely having a move here today as we do this interview, and it's been, I think really from Trump himself down talking the dollar. This is the second really go around that they've gone after it. What's going on with the U.S. dollar on the dollar index and the dollar versus gold? Are we seeing anything significant this week?
I think so. Let's start with the dollar. As you noted, Trump has made some statements, and the dollar has fallen, not just today, but really since the beginning of the year. The dollar index hit a high close to 104, and as we're speaking, it's below 100. So, for the dollar, that's a pretty good move. Now, interestingly, after Trump got elected, the dollar rallied sharply. It went from 97 to 104 over a space of a couple weeks. And I was actually studying, following the election, who Trump's advisors were, what kind of statements they've made in the past, get a feel for what kind of economic policies they would favor. And I read several of them that advocate for higher interest rates. They would say things such as quantitative easing was a failure. I was thinking in particular of the chief economic advisor during Trump's transition that he had on his team. And one thing that I think is obvious to everybody now is that Trump's goal is to do the things he said when he was campaigning, and that's to bring jobs back to the United States or encourage job growth, particularly in manufacturing. And he's doing the tariffs. He's going to, him and the Republicans are going to lower taxes. They're going to do all these things that he said. And I think a lot of people weren't expecting that. But what we've seen, though, are seemingly contradictory statements. As I mentioned, I saw many statements by Trump's advisors advocating for higher rates, and even a couple of them actually advocating for a strong dollar, almost asserting that would be a linchpin for the U.S. economy. And Trump actually himself made a couple statements supporting a strong dollar. Now he's making statements that are seemingly the total opposite. And so there is a kind of a theme out there in the media that, Trump is a little bit, when it comes to the financial markets, he might tweet something, he might say something, he's moody, he might be almost out of control. And that could impact the markets on a daily basis. So one could say, oh, Trump said something about the dollar and it's not down. Maybe next week he'll say something positive and make it go up, and he's just kind of crazy. But in reality, I think that you've got to realize that Trump's main goal is to grow the economy and jobs and so forth. Whether his ideas are right or not, I'm not here to argue that, just to say that's his goal. And therefore, with the dollar, I think what's really seems to be going on is he doesn't want the dollar to go up, really above 104 or go up in a meaningful way. And I actually don't think he wants the dollar to crash either. So I think what we're about to see, or we're starting to see, is Trump, say things, or his Treasury Secretary will say things too, to try to get the dollar to trade where they want, while they implement all these other policies that they think are going to grow and stimulate the economy. Now, gold, of course, gold, as we've said before in a previous interview, I firmly believe gold started a new bull market last year, following a brutal bear market, especially the gold mining stocks that fell close to 90%. And we had a tremendous first leg rally in that bull market last year. It ended in the summer. And now, after that we corrected, and we're still in some sort of consolidation with resistance somewhere between 1,300 and 1,320 on gold. And until it breaks that, that's where we are. And when it does, eventually we're going to have a transition into the second leg of the bull market, which can go on for years, but we're in this kind of intermediary phase. I actually think it's a good time to accumulate and buy before, it goes up for, I think, will be a couple years. And so I interpret the action in gold as part of that range, and, I don't get too worked up what it does on a daily basis. And frankly, when you're in one of these consolidation ranges within a bull market, it's very difficult to predict what it's going to do, day by day or week by week. And I don't know, gold has resistance at 1220. We touching it basically. And I do think when we go through that, it'll continue higher. But I have no idea that, let's say it goes through that next week, or it could do it tomorrow, it could do it next month. I have no way to predict it. And I also have no way to predict what exactly will happen afterwards. Does it go right through 13 and just go on up, forever and forget about that resistance level? Or is it going to go up to 1300 and pull back again? I have no way to predict it. And therefore, my thinking is the thing to do is own a position that's an investment position in gold and mining stocks for the next couple years. It's not so big that you get shaken out, but it's big enough that you'll make a good profit. And that's, I think, the real secret to investing in just about anything. And when it comes to gold, it moves so fast, and it's an emotional trade. And I can tell you, like, the sentiment I get from people on my email list is whenever gold's below 1200, people just like panic and get scared. They think it's going to crash. And in fact, you even see internet promotions appear on Google AdWords promoting gold crashes when gold's below 1200. And then when gold's around 1200, I think people feel safe about it, but it won't really be until gold's above 1300 that the average Joe or it starts to really get interested again. And so that's a quiet time is where we are, and I like that as a time to buy too.
Sure. I've noticed in the junior mining stocks specifically, a lot of them are just churning. And now, of course, there's nobody. I mean, I know people are probably wondering what's going on, and I'm certainly not complaining, because the fact of the matter is, the good ones are up anywhere from 150 to 300-400% from this time last year. So look, they have made big runs even with this pullback. Do you feel like the juniors specifically, which many of my subscribers, including myself, are involved in, do we need gold to make a 52-week high, which is not that far away? Does it need to make a 52-week high in order to really see these things move like they were moving in 2016?
Yeah, the juniors are really interesting, and I like them as buys here. For one thing, when gold had this pullback and the mining stocks, GDX, the ETF, and the majors and so forth, the juniors did pull back a little bit, but they pretty much have been holding up and doing pretty well over the past couple months. They didn't crash and so forth. And I think that's actually telling us it's a real positive for them, and there's not a huge downside risk really in the entire sector. They're basically telling us, by the way they came down, gold's not crashing or about to crash and so forth. As far as when they're going to go up, I got two thoughts in that. One is they fell so much in the last bear market that I was looking at juniors, and I still do today, to look for new potential investments. And a lot of them they fell so much that they had market caps of 2 to 5 and 6 million, which is fairly small for these small exploration stocks. I mean, yes, they're small cap stocks, but historically the sector as a whole tends to have a market cap in the 25 million range, and they're still priced very cheap. Basically, they bottomed in January last year and had a good rally for several months and given back half the gains. It's kind of the story of most of them. Now, I think in the next leg, whenever it starts this bull market, that they're really going to start to take off and do really well. And when I first got involved in the mining stocks, it was back around 2002, And I just kind of dove into the sector as far as trying to get more knowledge about it because it was new to me. And one of the things I learned back then is that the major mining companies like Newmont and Barrick and today these ETFs, they tend to actually go up first and lead, and then on the first leg of the bull market. And then once the second leg gets going, the juniors start to really do well, and they can go up almost month after month for a couple of years. So I think that's what we got to look forward to. The timing of that, I really can't tell you. I mean, if I just look at the junior stocks themselves, and I'm monitoring, let's say, a couple dozen of them, a lot of them have very similar charts. So they're consolidating in a very narrow range, 2 to 3 cents, and I mean they can break it any moment. They could do it tomorrow, or they could do it in 3 months. So that's not helpful to people, but in a sense, I think it is because it tells us just buy and just wait, and by the end of the year you should be richly rewarded because when these things go up, I mean it's pretty amazing.
Sure. No, that's a very, very good point. A lot of people in the media, as well as the alternative investment media, have been kind of screaming from the rooftops about bonds. And I know so many people who've tried to short the bond market over the years, only to be burned. What are your thoughts on the bond market? Is it about to reverse out of this 30-plus year bull market, which it seems like it has nowhere else to go, right? But is it worth trying to short or try to trade this market, or should people just basically stay out of it, and perhaps their gold exposure is the closest thing to a shorting the bond market?
Well, it's an interesting question, and I believe they topped out last year globally. That we've seen a secular top in bonds, and I started to really worry about that in the first half of the year. We were seeing negative interest rates in Germany and some other European countries. And to me, that was the craziest bubble or valuation in anything I'd ever seen, because you're basically buying something guaranteed to lose money and if you hold it, and it just makes absolutely no sense. So things, globally, bonds did make a peak last summer. You can look at the TLT ETF, and it's done that, and it's off the highs. And of course, in the United States, we're now, heading in this era of higher interest rates. Not only do Trump's people assert they want that, but the Fed is on track to do it. So I wouldn't argue against either, both of them combined. However, I don't think bonds are going to crash overnight, or anything like that. And, they could still trade, they've trying to bounce here. They could, stay in the range and form a top over a year. Often when a bull market ends, you can get a top that lasts for 1 or 2 years. If you think about gold, it basically formed a top for 2 years in 2011, 2012. So I kind of think that's what bonds are doing. And that's a topping market is a tough market to really trade. Because everyone can get faked out. You can see it fall and short it on the bottom, and just try to buy on the top if you're bullish. And so I'm staying away from it. And really, I think what you said at the end there is the simple play, and that's just to buy gold, because gold's what's going to go up and benefit from a bond bear market, or even just a bond top, and which is, I think, what we got.
A lot of people want to trade their politics. Is there any way to trade the politics right now? Because on the one side, you've got Trump, who's just a very aggressive. He's to many people's surprise, because they're so used to politicians, he's really like doing everything he can to get his promises fulfilled. On the other side, you've got complete insanity going on right now on the streets of our colleges. People are being beat up for having dissenting political views. They're burning things down now. They're, small riots. This is not just an isolated event. This is happening weekly now since the inauguration of President Trump. A lot of people, they want to know if they can trade this. Is there a trade here for anybody?
Well, I actually traded on Trump. You could sort of say that after the election. Over the like immediately the day after I closed out my short positions, I went long banks and industrial stocks and transportation stocks. And I looked to try to figure out what's going to benefit, from Trump. And the industrial sector is one I think the companies will benefit. He's got advisors connected to him. Wilbur Ross, his commerce secretary, Carl Icahn, and so forth. That's how they plan on benefiting, frankly. The problem with that trade, though, is that the stocks in them, in these sectors are very, very highly valued. So I honestly don't know how much real upside there is from now. We've already had the big rally from November till the Dow hit 20,000. I don't know. Is the market going to go up 10% or whatever? From here, it's hard for me to be real excited about it, and I've trimmed the position down that I took then on that kind of trade. And that's one reason I think gold is more interesting, because gold stocks, as we've talked about, the juniors are really undervalued historically by their market caps. And I like to try to buy stuff that I think is early in a bull market. As far as trading against Trump, I don't really, know how you would do that. I mean, if you just think, well, he's going to fail, what would that mean? The stock market's going to crash or something? Well, I think it's too early to try to short the market.
Maybe a nice
I don't know.
Maybe a nice pepper spray company for the protesters.
Well, actually, one of the sectors that did go up quite a lot is the private prison industry. So there you go. I don't know what those stocks are doing this week, but they soared the week after.
All right, everybody. If you want to check Mike's thoughts and commentary out in his trades, go to wallstreetwindow.com. That's wallstreetwindow.com, and we're with Mike Swanson. Mike, pleasure speaking to you again, and we hope to speak to you again real soon. Thank you.
Thanks.